Markets. Today is the 2nd of November 2010, and happy trading to you all. This is midnight Eastern time, okay? Just to do this quick video for you guys, okay? We have here the 5-minute chart of the Australian dollar yen. As we know, there was very important news tonight. The Royal Bank of the Royal Bank of Australia has increased the interest rate. Okay, so meaning that giving to this Australian dollar yen currency pair a very bullish momentum. Okay, so the Royal Bank of Australia has increased the interest rate tonight. Okay, this is why you must pay attention to the news. Okay, if you were trading here and you were busy selling in this zone during that time, you see what's happened. The price just went up fast, very fast. Okay, but I was watching here, and the signal that I received was a buy signal. Okay, the signal we were looking for is to buy, but I don't want to trade this time. Okay, so I watched it. It went up nicely. Okay, as they increase the rates. Okay, but because of the news, nobody know how the news is going to come out, whether they're going to increase it or what's going to happen. So that's why you do not trade the news. There is a way to trade the news, but I won't talk about it at all. Okay, there is a way to trade the news also, but it's a very risky business if you want to trade the news. But there is a special way to trade the news also. Okay, so we see that the price will run fast. Okay, to this level here. It went up from 7974. Okay, quickly went to 80. Okay, 39. Okay, very fast. Okay. So how do we trade this situation? So what you need to do, after you go to www.stochasticmarket.com, you check the economics news, you note it down, okay, the time, okay, and the importance of the news, whether it's going to be a very a major news, okay, you pay attention to it. Especially this week, we are expecting a lot of news from United States, from the ECB Bank, from the Bank of England, and also the Bank of Japan. So from Wednesday, Thursday, and Friday is very busy. So be aware of it. Okay, if you do not pay attention to the news, I advise you strongly to pay attention to the news this week, because of very strong news coming up, and the professional are paying attention to that. Okay. So how do we trade this situation? What we do, we will use the Fibonacci tool, okay, the retracement. So because the price went from this level here, we'll start drawing from this level here up to where it ended, okay. So we will draw it quickly here, okay. We draw the Fibonacci tool, and we have it ready now. Okay, what we are looking for is to wait for the price to retrace to one of the Fibonacci retracement level. Now, what usually happens, most of the traders will just come and buy at 38% in this case, or 50%, or 61.8 Fibonacci retracement level, or some will just buy at 66% Fibonacci retracement level, or some will quickly buy at 78% Fibonacci retracement level, or 88% Fibonacci retracement level. That's not the way professional trade, okay. That's not the best way to do it, okay, because what you are doing, if you are trading that way, you are trying to impose, okay, your belief on the market, okay. And if it doesn't work, you know the result, okay, because there is a time to buy and a time to sell. What you want to do is to wait for the price itself, okay, to come back down nicely to one of the levels, because they are just levels, okay. They can become a support, and they can change to become a resistance also, depending on the direction of the price, okay. So what we are doing is just waiting and see what the price will do. The price usually find a support, the best support level, when the price goes up like this, okay. Repeat, when the price goes up, these lines are likely to become a support if the price retraces back down. I repeat, if the price went up, okay, these Fibonacci level are likely to become a support level. If the price went down, these Fibonacci level are likely to become a resistance level, okay. But that thing is guaranteed. So we just watching the price now, okay. So usually these people who bought it here, but I doubt it, this currency pair will have a bit of difficulty to retrace back down, because this is a major news now. So most of the banks will keep buying this Australian dollar yen currency pair the whole day almost, but I hope they will give us a pullback, a healthy pullback. It will be very nice. So we're expecting this currency pair okay, to pull back, okay. Usually they pull back to 38%, which is that level here, or they may pull back all the way to 50%. Nobody knows, okay. Or they may pull back to 61.8, okay. Or even it can pull back up to 66% Fibonacci retracement level, or even go all the way to 78% Fibonacci retracement level. Now, why you need to remember that the smart money, okay, the smart money always like to buy when the price is at a reasonable price or at a fair value or is very very cheap, okay, very important. So in this scenario we know that the Bank of Australia has increased the rate. If this currency pair dare, repeat, if this currency pair dare to retrace back to 78% level, that's excellent opportunity to buy. That's because we know that it shouldn't be at this level because of the increase of the rate. It should be going up. But if you return back to the 78%, that will be excellent place to buy. Okay, but the price usually in this condition will trace to 38% because other traders who miss this move are so eager. Okay, they are so eager. If a lot of traders are so desperate to enter the trend in the direction of the trend, okay, the price will have difficulty to return back to the 78%. So which means the first support level, which is 38%, will be the first support level. So what you need to do when the price comes to 38%, you acknowledge that, okay, and then you observe it on this 5-minute chart, okay, waiting for the price to pull back down, and then for the trend line to be broken in again to the upside. Okay, that's how you trade it, and then you just follow it, or you use your TSTW24 trading system, your master swing, your master day trading system, or you use the TSTW24 or the TSTWSYS08. Okay, so you expect it to come back down and then for the trend line to be broken, and you will have a continuation pattern to the direction to the upside. There is another Fibonacci tool that we use, which is the Fibonacci extension. Okay, so when the price comes to the 38%, it's likely to go up to the 138% Fibonacci retracement level, or 127% Fibonacci retracement level, or sometimes even at 161% Fibonacci retracement level, which will be our target. So if you do not know about the Fibonacci projection, you may go on YouTube and type in Fibonacci projection. Excellent video posted by our fellow traders. You will be able to watch it or go on Google, and then you'll see about the Fibonacci projection. Okay, so when the price or sometimes the price will come to 50% and find the support, okay, and retrace back up again, or 61.8 Fibonacci retracement level. So we are just waiting. Some traders would like to sell to bring it down. I don't do that because you don't know whether the price is going to come down until the trend line is broken. Okay, so some traders, they gamble, they go because it went up so fast, they say it must come down to 38%, and they will start selling in this zone here. That's not the best way to do it. And especially with this currency pair, Australian dollar yen, there is a lot of chance that this currency pair find it very difficult to retrace back down even to 38% Fibonacci retracement. So that's how you will trade the new. The new will, you allow the new to come out first, and then you draw your Fibonacci line, and then you wait for the price to retrace to one of the level and to find a support there, and then to turn around. Okay, I hope you enjoyed this video, that you put into practice in order to cream the market consistently. Thank you.